Hello and welcome to Donachin Investment. This analysis is for ICICI Bank on the New York Stock Exchange as of 25th of July 2026 with a share price of $29.51. The full report is on donachin.ca. A hold at $29.51 across all three horizons. ICICI is one of the best banks in the world, but the price has run full. This is a great franchise at the wrong price, not a buy and not a sell. Let's be clear on the business. This is superb. Return on equity around 16.5%, loans growing near 20%, a margin that is still expanding, and pristine credit quality with bad loans under 1.5%. It scores 85 on quality, one of the highest bank scores we give. It sits in a structurally growing economy with a long runway. There is nothing wrong with the franchise. If anything, it is getting stronger. Here is the catch, and it is the reason the signal changed. The stock trades at about 2.70 times book value. When we value it properly, on a consistent Indian basis, using an Indian discount rate and a disciplined long-run growth rate, the price it warrants is closer to 1.84 times book. So it is trading well above intrinsic value. On our scorecard, valuation drops to 38 in the expensive band, which trips our valuation ceiling and caps the signal at hold. A 16.5% return on equity is excellent, but it does not justify paying 2.70 times book indefinitely. There is a second, smaller reason for caution. In the current stagflation-tilted global backdrop, we have emerging market equities as an economic headwind, and India is a net oil importer, so the oil spike does not help. The near-term tape has recovered, and the franchise is firing, but with the valuation full and the macro leaning against emerging markets, this is a name to own patiently rather than add to at today's price. The risk is really about valuation and the currency. A high-quality bank at nearly 3 times book has little margin for error. Any wobble in Indian growth, a weaker rupee, or a broad emerging market D-rating could compress the multiple toward the bear case around $25. It is not a distressed situation. There is no do not buy here, and no reason to sell a great franchise. It is simply that at this price, the upside is thin and the downside is real, which is the definition of a hold. Now weigh the risk against the reward. The bull case is roughly 25% above today, the base case the most likely about 10%, and the bear case a fall of about 15%. So you are risking about 15 to make 25. So, our call on ICICI Bank on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donachin Investment at donachin.ca. The link to the full report is in the notes below. Have a great day.